Oh, good evening. It's Shooter. We're going to go over primary waves, major markets for June. Of course, at the end of our presentation, please do review our disclosures. Now, here in major markets, this is a monthly article. We're covering the breadth of the markets. We look at a comprehensive review, 6 weeks to 3 months out as far as our time, using Elliott wave analysis as our primary technical tool, of course, with some other factors we've added in there, which gives us a little better visual. Now, of course, we suggest you using this, to manage your positions. Consider adding or buying during primary wave setups long, which are typically our waves 3 and 5. They are our uptrends, while reducing exposure during waves 2 and 4, which are downtrends. Now, of course, Elliott wave's not perfect, and neither am I. And honestly, I'm subject to market conditions just like everybody else is. It's just sometimes we're in a trend I see picture a lot clearer than other times. So, all right, so this month's narrative, my bias is I'm going sort of neutral here in the indices, with the exception of being bearish IWM into FOMC. And when we get to the chart, I'll sort of explain that. So now, unless Mr. Market gives me something else to change my stance, that's where I'm going to stick. Now, all eyes are on FOC June 12th. However, the most significant factor is consumer spending, which shows sign of weakening, but confidence, as we saw Thursday, remains steady. So that is actually good, but I don't know that that's going to push us in either direction, I guess is my point. I think the more likely outcome in the FOMC June meeting is that they reduce tapering, and I think on the extreme side, they halt tapering. I don't think that's going to happen this time. That may come in July if they don't cut rates in July. I think they would announce a package if that's the case. But I think Mr. Market wants more, and I think the sentiment in earnings, or this earnings season, really suggests that, because we had companies that beat EPS, beat revenue, and marginally guided lower and got creamed. And then there are other ones who had very cautious guidance who were just clobbered like CRM. Barring for unseen events, I anticipate, the dips to continue to get bought. I don't see why that changes. And this is fueled primarily as momentum, from index funds or indexing. And basically, a person gets his paycheck, takes 3%, puts it into the market. And these funds are just buying market cap. That's all they're doing. So, and that's where we're seeing our rotation. So they're buying the laggers. Like right now, Tesla keeps getting bought, but then it retraces, then it gets bought again. That's, I don't think that's going to change. So I think until we get some sellers, which implement some genuine fear in the market, I think we stay the same. And that could be in play for weeks before we see that happen. And I just don't fathom that right now at this moment. So, all right, let me just look at the chart real quick, give you a visual, and I'm going to go back and sort of try and stick to my bullet points. TLT is currently in a cycle wave 3. It's just completing a cycle wave 2. However, we're back testing this. This looks a little weak to me. We're getting a little price rejection. We got price rejection here, 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 here. So we're in this little downtrend. I wouldn't be surprised if that continues. So, what I suggest to sort of mitigate that, if I was going to put on a position here, I would think September 85 cash secured puts, and plan to sell 80 cash puts if we get down there. So use that as a scaling mechanism to get in here. I don't know that we get down to 70. I think that's at the lower side. And basically, I'm looking at this is drive 1, this is drive 2, and our 70 would be a drive 3 down here. But that's still a viable outcome, and I want to make sure I shared that, okay? Now, with the U.S. dollar, we're still beating our heads against this double top, and the count says we're going to head towards primary wave 3 down about 96.04. However, let me come back here. We've just completed this primary wave 2, right? And then, of course, we're going to head down towards that 3. However, this is a flat, this whole pattern here. So, roughly we've got a number from about 107 to about 95 on the low side, which has been this range. I think we're going to be in this range pretty much all of 2024. So now, what would I do with the dollar? I'd sell any rip to 106. I don't know that you're going to get a lot of room. I don't know that you're going to make a lot of money doing that, because this is tightening up. So what's going to happen is either it breaks out or breaks down, and it still could break out, but that's not necessarily going to be a positive thing for Mr. Markets. That's for sure. All right, let's start by just looking at the S&P. Now we're in this primary wave 4. We haven't quite put in the 516.89. We're at about 527 as I printed this. So maybe $10 lower from where we are. Then we should continue on towards our primary wave 5 around 553. Okay. Now, let me just bring in the premise here. We're at a crossroads here. This still is the flat. Flats come in 1, 2, 3, 4, 5, 6, 7, 8, 9. So we could come way the heck. I mean, we could be in here all the way out to January of 25 in a flat. Now, the only thing that really suggests otherwise is that we're broadening. So I'm thinking that we still could backtest this 493. So let me explain how I would handle that if I were you. The only action I would consider is 450 cash secured puts, and that's if we push down towards that 493 so you get a better premium for it. Because I don't think we break down there. I think at best we get down to the 1 standard deviation below the mean. I think at best, because look at, we've tagged it once, tagged it twice, and this downtrend's over with. So we have extreme weakness, and there was a catalyst for that. So we need a catalyst for us to see that extreme weakness. And it's going to tell us pretty aggressively if we get a catalyst. So that's just my take on the S&P. All right, just starting off with the chart with the NASDAQ. Now, it's a mess. It's the simplest way to explain this. Because this is, we're in this wave 1 of a cycle. Wave 2 is done. We're in wave 3. So we're in this primary wave 3. Primary wave 1 is here. Primary wave 2 is here, and 3 is pushing here. But we're getting some significant price rejection. And a lot of the Magnificent 7 look weak to me. So this could be done here. It could break down, then put in a 5 just a little higher than that, and then we head lower to put in our cycle wave 4. So this all could step down with market weakness. And, whenever you see this bouncing, this bounce, drive 1, drive 2. So what would this be drive 3? And what is that? Potentially a 3 drive. You have the potential for 100% retrace back to the 258. I don't think that's going to happen. I think the most likely backtest if we get an extreme down here is a 23,650. But I think we need an extreme dollar. I mean, a dollar above 107, and we need another catalyst for that, really. Because ultimately, I don't think the dip buyers disappear here. I think we dip, maybe back just above the primary wave, maybe. I'm not saying that's definitive. Right now, I'm saying the count is going to manifest because that's been the MO of this market. Buy the dip, buy the dip, buy the dip. So why is it going to change now? We need something that's going to change the theme for Mr. Market and something that's going to shift that mentality of those index, which I just don't see happening right at the moment. All right, now looking at the Russells. Now this is the weak sister. We had a primary wave set up short at 211. Really hasn't been, it's sort of just stalled. So it's really doing nothing. A lot of that is because there's a lot of financials in here and financials have been doing well. So it's been holding up the whole market or the whole index. So right now the count is finishing a primary wave 2. Which is right about where our high came in there around 210. And then we should be heading towards a primary wave 3 down to 176. Now, here again, there's nothing that says we don't build out this flat. So we've been in this flat from about 240 down to about 160. So that whole range there. Notice this, taking this high and this low and saying, this is our range. We've been in this flat. Now, I don't know how long we can get stuck there. I guess as long as the Fed gets sticky with rate cuts, I think we could stay there just that long. So, Wave 3 suggests we're down to about 176. I still believe that, except for we rejected the breakdown here. We went right down to it. Triple bottom. Typically those are pretty consistent for bottom. So we could break out here. We could. I'm not going to say we're not. Because ultimately Mr. Market determines that, not me. All I do is sort of interpret the charts. One thing we are doing is we're skinnying out on the Bollinger Bands. Notice how broad we are here. So that is one reason I suggest that we could break out. So any broadening on the downside, to me, would suggest that we're going to break down. So all you really have to do is watch that 3rd standard deviation on the Bollinger Band. When that starts to break down, I think that's when you see it end. So, all right, looking at IBIT, sort of covering Bitcoin, we're sort of in this flag, except for it's a big flag, as I call it. But it's going to ultimately be a flat. Now, we came in shallow. I had to project this count out because it really, I basically took the length of wave 1, said, hey, this is where our 2 should go. So we're a little shallow, but that's the way Bitcoin has been. It's been very shallow on the retraces. So until that MO changes, I could be, on the high side, basically I can draw a speed line. I can't do it on this chart, but I could draw a speed line up to this and say, hey, there's the 3 ranges of where we should be, 1, 2, 3. Or 1, 2, and then a 3rd one down over here. Typically, like with any retrace, an ABC pattern has 3 depths to me. Okay, equality, extended, or elongated. Okay, now this to me is not even equality. So that's the minimum I always want to look for. So really until that condition is met, I really wouldn't want to get long in IBIT until it breaks out above this high of 42. So we're sort of in this range between 42 and 32. And I would have much more conviction adding decent position size at 29.72. Let me just make that clear. However, whether it back tests to this 29.72 or this is our bottom, that is not going to alter this projection our way through to 62. Actually, it might extend it a little bit because that's typically what happens. Great trading. That's what I've got for this week, folks. Until next time.